I
Yeah,
want to hear your thoughts on the IWM. Let's continue this train of thought here. And what is happening inside those 2,000 companies that, seemingly can't find their way in any type of market? Because S&Ps have been just kicking butt, Q's kicking butt, and then you got the IWM that's just getting kicked in the butt. What turns the story around, Anne Marie?
So, we talk a lot about the economy and the market being bifurcated, right? There are obviously some places that are really not doing well. We can see weakness in the economy in all kinds of spaces. And if I were a betting man, I would say that what's happening in the Russell is not so much interest rate sensitive as economy sensitive. And so what I see is big players using any spikes in the IWM for exit liquidity. And so for those of us that maybe aren't super familiar with exit liquidity, it's where the big bounces make those folks with the highest holdings in a particular instrument leave the market versus enter. And so the reason that I suspect we've got this stall out here is because if we went in there and we looked at all of these companies that struggle with cash flow, I don't think it's all interest rate information. And that's why when we see these notices about interest rates, we just say, hey, we should be moving up, but we're not. So there's something else that's correlating with this move versus just interest rate. It becomes a much more complicated play.
I've argued for a while too that maybe, there's a lot of these companies that may benefit from AI, but there's no direct benefit for a lot of these companies. There's no direct revenue streams coming, and if you think it's AI versus the world here right now, the IWM is kind of in the wrong spot here, because most of those companies probably aren't creating the technology. They're probably users of the technology.
Exactly. And they're using it and then cutting staff because of it, because they're still trying to make their margins.
And again, I don't know, if they can, reinvent the wheel here. Like maybe it's going to be, those margins are going to be, wide enough that they're going to turn it around, but at the end of the day, there's still a trade-off here too, because as you cut staff and you lay more people off because AI is replacing those jobs. I mean, there's less consumers or less dollars out there to consume too. That's why I've always been a little bit, it's hard to just say, yeah, AI is going to make everything better. It's going to make things better for some companies, but it's not going to make things better for all companies.
Oh, 100%. And we saw that in the age of the internet, right? The 2001, a lot of occupations absolutely disappeared. And we've got a new, I don't know, I guess we've got a new work paradigm. I'm not really comfortable doing any investment inside of the IWM unless something is really, really strong. And so buying that as a whole, that is just not the pond you want to fish in unless you're doing the same thing. You bought it and you're like, holy cow, this isn't moving. Next big spike up, I'm out of here. Or you're saying to yourself, oh, next big spike into major resistance, I'm going to take a short.